What's up, everybody? How's everyone doing? What's better? Is it this? Maybe. I don't know if this is better. What's up, everybody? What's up, everybody? Is everybody having a great evening? I just came back walking the dog, so my hair is completely wet, as you can see. It's great weather in the Netherlands right now. I'm not sure if I can show you. I can't. No, I'll dox myself. But it's it's great weather here. No, it's so I'm completely wet, but I'm very ready for everything that's coming today. So far, amazing volatility. I'm seeing some interesting things in the chat, which I'll repeat, of course. Yeah, the rate cut. So like the interest rate cut was already 22 minutes ago, right? But that was already known, right? It was expected that the interest rate decision would be that it would drop down to 4.25%. I think the FOMC economic projections were a little bit different, right? Because the question was how many rate cuts can we still expect for 2025? And I think they actually said that they expect 2 more rate cuts. And that's bullish, in my opinion, right? So if we actually take a look at the probabilities for October, it's most likely we're going to get a rate cut. And for the 10th of December, look, 2 rate cuts at this point of time for the rest of 2025. So that means a rate cut in October and a rate cut in December is most likely by 92% after what just happened. In my opinion, that's bullish, all right? It's going to be volatile. We could have some sort of a sell the news event, even though sell the news is not really relevant right now, right? Because the news has already come out. So what's going to happen is not sell the news. What's going to happen is a reaction to what our big friend of the channel, friend of the show, Jerome Powell, is going to say during the press conference. And that is what we're going to be live streaming. For those of you who watch these videos very often, you know what we're going to do. We're going to watch that live, and then when he says something interesting, when he says something where I think, oh, we need to talk about that, then I'll talk about that. But quickly, I just never shared that I was live in all the groups, so let me quickly do that right now. Can we do that live now? There we go. Let me quickly do that, and then and then I'll go through the chat, and then around 8:30, so that's 6:30 UTC, we shall talk or we'll look at the live stream together. Right, so far so good. Decent reaction. Bitcoin dominance is down, so that's great. Yeah, okay, Discord. Let me see. In the feed, there we go. And there we go as well. All right, so everybody knows that we're live. Very important. So, how's everyone doing? I hope you're all having a great week so far. It's been a little bit of a difficult week, of course, with the FOMC coming up. Bitcoin was relatively strong, but the Bitcoin dominance was relatively weak. This is beautiful. Look at this candle. That's crazy. But yeah. So, what's up, everybody? Evie, welcome to the chat. Glenn, welcome. Javier, welcome. Truls Peterson, welcome. Mensko, welcome. Zamilato, welcome. Goran, welcome. How's everyone doing? Mike, welcome to the stream. Brian, good to have you back here again. Gustavo, welcome. Amen, welcome to the stream. Andrew, Barbie Bike Gang TV. Great name. Charlotte, welcome to the stream. Yeah, it's very, like the weather right now. Can I show you? Yeah, I think I can show you. Weather, Amsterdam. Yeah, so this is the weather right now, right? So it was amazing walking the dog. It's well, light rain. No. This is fake news. Not light rain. It was medium rain at least, but luckily we're not made of sugar. Daniel, welcome to the stream. Jungle Man, welcome to the stream. Boris, welcome to the stream. What's up, everybody? A Fairy Tale, welcome. Nicola, welcome. Tristan, welcome. Abhishek, welcome. Jay Wilson, welcome to the stream. How are you doing? Omar, welcome to the stream. Yeah, BioAlarm fucked me up because BioAlarm said it's going to stop raining when you want to walk the dog. And that was not true. It started raining even harder, right? So BioAlarm is one of the apps that has fucked me over too much. And there goes the monetization, all right? I'm not going to make any money from this stream. Put on Mascara, welcome to the stream. Edvardas, welcome to the stream. Satan, welcome to the stream. Mr. King, good to see you here again as well. Yeah, that's the mistake, Tristan. Deonda, I hope so. Nagaland, is that South Africa? Or am I tripping? No, it's India. I'm tripping. It's definitely not South Africa. 3 more minutes. 3 more minutes for the press conference. I'll look up the live stream real quick in a moment. Yeah, Drew, listen, it's raining in the Netherlands a lot, but Wales, from what I've heard, is indeed even worse. Same with Scotland, I presume. Athena pump. Yeah, Athena's quite strong. WorldCoin, I covered that this morning. That's quite strong. Those are definitely interesting to watch. Ethereum is quite weak, which it has been for the last 3 weeks. So, RuneScape? No, I've never played RuneScape, to be fair. Espresso fries, come on, man. Just leave that umbrella at home. Ooh, Montreal, welcome, Kim. A target for Athena, realistically, look, man, if Athena really starts rallying here again, a realistic target is probably $1 or $1.10. Like, that's realistic, right? I mean, Athena can rally, right? It's the question whether it's going to rally, because it seems like a lot of VCs, etc., are selling into the price right now, which is not amazing, but okay, it is what it is. Joanna, welcome to the stream. Good to see you here. Matus, welcome. Maruti, welcome. Wesley, welcome. We have some South Africa presence. Welcome to the stream. Hopefully you're of Dutch descent. No, I'm just kidding. Just kidding, of course. Don't cancel me right now, please. Iowa, Patrick, welcome. That's nice. Oh, it's starting. Oh. I'm going through the chat too much. All right, let me see what I can do. Here, I need this one. So, for those of you who don't know, if this is your first, if this is the first time that you're watching one of these streams, then first of all, welcome. It's always a great fun listening to Jerome Powell in the press conference. What I'm basically going to do is I'm going to put on the stream on the screen so you can actually watch it yourself as well. And then Federal Reserve, and then look, we'll just look at the stream together. And then if something interesting is being said, then I will pause the audio and I will talk over it. Or I will not pause the audio and I'll just talk over it. So let me know what you prefer. There we go. There is the stream. Let me quickly put on some subtitles. Options. I want the font size to be bigger. Yeah, that's good. Font color yellow. Oh, there we go. There we go. Oh, it's starting. All right. Can everybody hear this? I think so, right? Let me know. Let me know if everything is all right. It should be working.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people.
Yeah, okay.
While the unemployment rate remains low, it has edged up. Job gains have slowed, and downside risks to employment have risen. At the same time, inflation has risen recently and remains somewhat elevated. In support of our goals, and in light of the shift in the balance of risks, today the Federal Open Market Committee decided to lower our policy interest rate by 0.25 percentage point. We also decided to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that growth of economic activity has moderated. GDP rose at a pace of around 1.5% in the first half of the year, down from 2.5% last year. The moderation in growth largely reflects a slowdown in consumer spending. In contrast, business investment in equipment and intangibles has picked up from last year's pace. Activity in the housing sector remains weak. In our summary of economic projections, the median participant projects GDP to rise 1.6% this year and 1.8% next year, a touch stronger than projected in June.
Okay.
In the labor market, the unemployment rate edged up to 4.3% in August, but remains little changed over the past year at a relatively low level.
Okay.
Payroll job gains have slowed significantly to a pace of just 29,000 per month over the past 3 months.
I'll tell you why in a moment.
A good part of the slowing likely reflects a decline in the growth of the labor force due to lower immigration and lower labor force participation. Even so, labor demand has softened, and the recent pace of job creation appears to be running below the break-even rate needed to hold the unemployment rate constant. In addition, wage growth has continued to moderate while still outpacing inflation. Overall, the marked slowing in both the supply of and demand for workers is unusual. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen. In our SEP, the median projection for the unemployment rate is 4.5% at the end of this year and edges down thereafter. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.7% over the 12 months ending in August, and that, excluding the volatile food and energy categories, core PCE prices rose 2.9%. These readings are higher than earlier in the year as inflation for goods has picked up. In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations have moved up, on balance, over the course of this year on news about tariffs, as reflected in both market and survey-based measures. News. Beyond the next year or so, however,
this is very low volume.
Most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 3.0% this year and falls to 2.6% in 2026 and to 2.1% in 2027.
Not bad.
Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by a quarter percentage point to 4 to 4.25%, and to continue reducing the size of our balance sheet. Changes to government policies continue to evolve, and their effects on the economy remain uncertain.
So he was talking about
higher tariffs have begun to push up prices in some categories of goods, but their overall effects on economic activity and inflation remain to be seen.
I don't really like this. A
reasonable base case is that the effects on inflation will be relatively short-lived, a one-time shift in the price level. But it is also possible that the inflationary effects could instead be more persistent, and that is a risk to be assessed and managed. Our obligation is to ensure that a one-time increase in the price level does not become an ongoing inflation problem.
Bearish, a little
bearish. In the
near
term,
again,
risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. When our goals are in tension like this, our framework calls for us to balance.
You can hear me, right? Or is Jerome louder?
Having increased, the balance of risks has shifted. Accordingly, we judged it appropriate at this meeting to take another step toward a more neutral policy stance. With today's decision, we remain well positioned to respond in a timely way to potential economic developments. We will continue to determine the appropriate stance of monetary policy based on the income.
Okay, so this was a little bullish, right? Because he said that they're changing their stance, and their stance and his tone always very hawkish, and we want him to be dovish. So that's a step in the right direction.
Scenario for the economy. The median participant projects that the appropriate level of the federal funds rate will be 3.6% at the end of this year, 3.4% at the end of 2026, and 3.1% at the end of 2027. This path is 1/4 percentage point lower than projected in June. As is always the case, these individual forecasts are subject to uncertainty, and they're not a committee plan or decision. Policy is not on a preset course.
Volatility.
The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission, and we at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to our discussion.
All right, now the great questions always come.
Thank you. Chris Rugaber at Associated Press. As you know, Fed Governor Stephen Miron has kept his position at the White House, even as he's joined the Fed board. This is the first time, I believe, the Fed's board has had someone with executive branch ties in decades. Does this compromise the Fed's independence from day-to-day politics? And relatedly, how can you maintain the public's perception the Fed is politically independent with this dynamic? Thank you.
So
this will
we
be
did welcome a new committee member today, as we always do.
This will be very interesting.
Our dual mandate goals. We're strongly committed to maintaining our independence, and beyond that, I really don't have anything to share.
Oh, he's not saying anything.
Extensively about the impact of tariffs on inflation, although perhaps with many companies appearing to eat the tariffs, tariffs may be impacting the labor market and other parts of the economy instead. Do you see that as a possible outcome here, that tariffs are the reason we're seeing some slowing, particularly in the labor market, rather than in inflation? Thank you.
You know, it's certainly possible. You know, we're beginning to see, we have begun to see goods prices showing through into higher inflation, and actually the increase in goods prices accounts for most of the increase in inflation, or perhaps all of the increase in inflation over the course of this year.
It's a matter of time. It's a matter of time before we go up, everybody. It's a matter of time. All right. You look at the higher time frames. Tell me that you're bearish on this chart. It's going up. It's going up higher. I don't make the rules. It's going up higher. Don't worry. Don't worry.
Much more about the change in immigration. So the supply of workers has obviously come way down. There's very little growth, if any, in the supply of workers. And at the same time, demand for workers has also come down quite sharply, and to the point where we see what I've called a curious balance. It's, you know, typically when we say things are in balance, that sounds good, but in this case, the balance is because both supply and demand have come down quite sharply. Now demand coming down a little more sharply because we now see the unemployment rate edging up.
Nick Timmerosa, the Wall Street Journal. Chair Powell, do economic conditions and the balance of risks no longer warrant a restrictive policy setting?
So I don't think we can say that. What we can say is this: that over the course of this year, we've kept our policy at a restrictive level, and people have different views, but a clearly restrictive level, I would say. So, and we were able to do that over the course of this year because the labor market was in very solid condition with strong job creation and all those things. I think if you go back to April and now look at the revised job creation numbers for May, June, July, and August, I can no longer say that. So what that means is that the risks were clearly tilted toward inflation.
So this is interesting, right? I mean, this basically is the key reason why we're going to get rate cuts, right? So this is good. This is good.
Toward greater.
But it's also known, so it's nothing new, but it's good.
We should be moving in the direction of neutral, and that's what we did today.
Under what circumstances would a larger than 25 basis points rate cut be warranted? And how seriously was that option entertained at your meeting this week?
This is also very interesting.
Spread support at all for a 50 basis point cut today. I think we've done very large rate hikes and very large rate cuts in the last 5 years, and you tend to do those at a time when you feel that policy is out of place and needs to move quickly to a new place. That's not at all what I feel certainly now. I feel like our policy has been doing the right thing.
Maybe a little bearish, but also not really new.
Inflation and the labor market evolved. I think we're now reacting to the much lower level of job creation and other evidence of softening in the labor market, and saying, well, those risks are maybe not fully balanced, but moving in the direction of balance now, and so that warrants a change in policy.
Colby Smith with the New York Times. Should we be viewing today's cut as the committee taking out some insurance against the possibility that the labor market is at risk of weakening? Or is it the committee's view that the dynamics of a downturn are already in place? I guess I'm just trying to square the shift in the rate forecast in the SEP towards more cuts than just 3 months ago, with the fact that the forecast for unemployment didn't change.
Yeah, I think you could think of this in a way as a risk management cut, because if you look at the SEP, actually, the projections for growth this year and next actually ticked up just a little bit, and inflation and unemployment didn't really move much. So what's different now? What's different now is that you see a very different picture of the risks to the labor market. You've seen, we were looking at 150,000 jobs a month at the time of the last meeting.
Okay. I think we have seen enough. It barely happens that 6 questions in, we still get a question that's going to matter. So let's do a little bit of a recap as far as I remember, because it's always difficult to remember. But let's do a little bit of a recap here. So ultimately, for those of you who missed it, the Federal Reserve interest rate decision and the interest rate itself was cut from 4.5 to 4.25%. When we talk about the projections, right? So when we talk about, all right, well, what do we expect from the interest rate at the next meeting in October, I think that is, and the meeting afterwards, which is in December, it is most likely that we are also going to get a rate cut in October, and it is most likely that we're also going to get a rate cut in December. Ultimately, I would say that's bullish. Right now, what I think of the press conference, I'm a little bit mixed, right? Because ultimately, what he's saying is that the key reason why they've cut interest rates, and for those of you who are aware of interest rates and who know what's been going on, kind of in the macro settings, you already know this, right? So I'm going to say something that's completely old news for you. I understand, but there are people for who it's very important. But basically, what he's saying is that the inflation is still too high, which honestly, I mean, I'm not going to get political, but inflation in the United States is too high, right? So then you cannot decrease the interest, or you cannot cut the interest rate too much. However, what he's saying is that the employment data that we've seen from the unemployment rates, but also non-farm payrolls, ADP employment change, JOLTS job openings, etc., that's becoming weaker. Right, so there's a risk, there's a major risk that unemployment and jobs in the United States are going to, are going to suffer. And when that happens, you cannot be too late with cutting rates, right? Because if that happens, you're going to get into a recession, right? So that's why they're cutting rates right now. The interest rate was at 4.5%. That is, honestly, look, I think the inflation in the United States is too high. I think the interest rate in the United States is also too high. So that's why they are decreasing it right now, and that's why they're going to continue to decrease it. The price right now is dumping. Look, if you go back to all the other interest rate decisions in 2025, in 2024, in 2023, which I've done, look, volatility is normal, and we're looking at the 30-minute time frame right here for Bitcoin, and you'll probably see something similar right now. Like, volatility like this is not strange, right? It's just not. So ultimately, I don't mind this volatility. The rest of the evening, tomorrow, maybe the rest of the week is going to be volatile, but ultimately, if you take a look at Bitcoin and if you take a look at altcoins right here, look, altcoins are still incredibly bullish, right? I mean, this is others, right? Would you call this bullish or would you call this bearish? I would call this bullish, right? I would call this bullish because we are in an uptrend, technically, but I would also call this bullish because we've broken out above a relevant resistance level right here. And then if we take a look at Bitcoin and you look at the 12-hour time frame, is this bullish or bearish? Short term, right? I mean, if you zoom out, I would say it's kind of neutral, right? Because if you zoom out to the daily time frame, we're kind of in some sort of a strange consolidation. But ultimately, if you look at the 12-hour time frame, and you'd have to say, I think it's most likely that we're going to be bullish or it's going to be bearish. What I personally would say, and what I have been saying, by the way, it's not a secret. What I have been saying is that I think it's most likely that we can spike down, right? We have the previous month point of control at 113.4. We have the 30-day rolling VWAP there. I think we can spike down into that level. And the interest rate decision and an FOMC day like today is the ultimate timing to do that, right? So that I do think is possible, and I think you should be ready for that. But after that, I still think it's most likely that we're going to at least fill the fair value gap right here at 120,000. And then when we get to that level, look, we'll talk again. Honestly, when we're talking about Q4, a lot of people are saying that we're going to get a move down, right? So that we're going to do something like, if we look at the 3-day time frame, that we're going to have a very deep pullback, similarly to what we had in March and April. In March and April, we lost the 3-day time frame uptrend. We did not lose the weekly uptrend, but that we're going to get a massive drop into this main support level between 100,000 ultimately and 90,000. Do I think that's a possibility? Yes, I think that's a possibility. Do I think that's most likely? No. I mean, what you see right now is that the dollar strength index, I mean, the dollar is losing value rapidly. And you see that equities are rallying up because of that. Gold is rallying up because of that. And because of all the fundamental changes that we've seen in the last couple of months under Trump's second administration, I don't see a reason why Bitcoin would not follow that. Right, so therefore, I have to be bullish on Bitcoin. I have to be, all right? I don't want to be, I have to be. The data is telling me that. So can we drop down into 104,000? Can we drop down into 95 and 90,000? Yes, we can. Do I think that that's most likely at this point of time? No, and a lot of people are saying it as well. If a lot of people are saying it, then I get a little bit scared, all right? Then I'm like, all right, everybody thinks that we're going to drop down. I don't know if we are. Right, so those are my thoughts right now. Let's go over some chats. that was my little rant. Hopefully you don't mind. Nice spike down from Bitcoin, by the way. Spike down, point of control at the bottom. That's nice. Case Sanders. Nothing happens on the markets because most of what has been said and what has happened today. And by the way, we're getting some volatility, so something is happening. But most of what has happened today was already priced in. It was expected, and we just did not deviate a lot from that expectation, I would say. Madar, big crash? No, there's not a big crash. Look, if you look at the 4-hour time frame, we're pretty stable. Over the course of this week, we've been pretty stable. Yeah, the Dixie, Josh, the dollar strength index, right? That's very weak. Espresso fries. I am still long on Bitcoin. I hold more altcoins, to be fair. But they're mostly spot positions. Not all of them, but mostly. Daniel, maybe later. The XRP ETF, I don't think that's fully priced in. What spot XRP ETF launching? Which one? I don't think so. Not by a major issuer, right? Yeah, but the Rex Osprey ETFs don't matter. For me, they're not real ETFs. They're not real, in my opinion. So I don't think it matters a lot. Maybe a little bit, but I don't think so. XRP going lower. I mean, XRP, same thing as what I said with Bitcoin. Spike down lower, but ultimately I think we're going up to 3.3. Philip, probably next week. Honestly. Probably next week. Yeah, it was already priced in, Patrick. 100%. That's true. I mean, I would say, are we going to drop down lower short term? Let's assume so. Let's assume so. That's always best. Maybe into 113. But honestly, I'm not too sure. But I also don't care too much. On the higher time frames, I don't think anything is going to change. On the lower time frames, we might spike down, we might spike up, but ultimately on the higher time frames, I don't think much is going to happen. GOSP target on Ethereum, I find that hard to say. I mean, Ethereum at this point of time is just quite weak. If we actually are able to pick up speeds again, then 5,500. This area up here is my next price target. Do I think we can reach that in October? Yeah, it's possible, but it's not guaranteed, unfortunately. But yeah, I mean, the entire market at this point of time is still incredibly volatile. It's going to remain incredibly volatile over the course of the evening, probably for the rest of the day that the United States is awake. And then when the United States goes to bed and the Asians wake up, they're going to make it volatile. And then tomorrow, when the smart Europeans wake up, they know what to do, and they'll bring stability to the markets. That's what's going to happen, I think. And that's a joke, of course. Solana from here. Solana, I don't know. Solana is just it's just difficult, right? And I'll tell you why. Because whatever I say with Solana, I cannot win, right? Because if I say, yeah, I think Solana is going to move up higher, then people are going to buy, and they're going to buy while resistance is right here. That's a bad decision. So I would say it's most likely that Solana is going to drop down lower into this. I think last video I said 230, 225. And then if we get a good reaction there, then we can break out and rally higher. If we get a weak reaction there, then we're going to drop down all the way into 210. And $210 for Solana is the first level where I would say, all right, I'm going to buy it again. I bought a lot of Solana during the summer or during August when we had this price action, right? So when Solana showed a lot of promise right here, a lot of momentum in the middle of August, I bought a lot around 185 down here. And then I started selling all the way right here up to the top. So I still hold some Solana, but the only price where I would say I'm going to buy Solana again is right here at 210 and $200. That's the main area I think to watch if you want a low risk entry on Solana. But apart from this, I mean, not much is happening in the markets right now. I mean, there's a lot of volume, that's certain. Athena is quite strong. Test is quite, Pepe is quite strong. WorldCoin is quite strong, but not much going on. Q4, Zach, I don't know. Q4 could go both ways. It really could. Bodhi, I think the dollar, at least for now, is going to drop down lower. If you look at the dollar and you zoom all the way out, this does not look like a reversal to me. This looks like the start of a downtrend. This looks like a break down from value right here. And I think this is going to continue lower, right? I think we're going to trend at least into a major support level like we have right here around 95 and 94. But okay, guys, I'm going to quit the stream. I still have some other work to do. Let's see if we still have some questions. No, all right. I'm going to. If you have any questions, guys, join the Telegram. Join the Telegram and Discord. It's free. There's a paid version, of course, as well. If you want my trades, we've made a lot of profits over the last two and a half months. So if you actually want to make some profits while trading, by just following my trades, but also if you want to become a better trader, you can contact me anytime you want, 24/7. There's some members in the chat now as well that know. So if you're interested in that, consider joining. But you can join my Telegram for free. You can join my Discord for free. And I post a lot of information in there as well. I post daily watch lists. I post news, etc. So join that. If you still have any questions, join that. Tag me in there. And for now, that was the stream. So hopefully all of you enjoyed that. I enjoyed it very, very much. My hair has dried up very nicely. So that's great. And going to work a little bit more. And then it's time for bed. So thank you, everybody. Thank you for being here. Hopefully I'll see you all in my Telegram chat, in my Discord chat, and otherwise hopefully I'll see you all during my next videos and or next live streams. Thank you for watching, everybody. Take care. It's going to be volatile, but ultimately, like I said, I still have a bullish bias on Bitcoin and on altcoins and on XRP. Ethereum a little bit less. Thank you for watching. Have a great evening, everybody, and